Hello, traders and investors. My name is Roger Scott. Today is the 24th of November. It's a light week. We've got Thanksgiving week. We got the Thanksgiving holiday. And typically, whenever there's a major holiday like Thanksgiving, you got a lot of traveling. So it's a very fragmented and light week. So let's go over the global data. Let's go over the indices about an hour before the opening. Let's go over through the major sectors. And then I want to show you some overbought levels and 3 hot stocks that are on my radar right now. So starting with global shares, they're mostly higher Tuesday overnight, as you could see here. Now, if you look at the Russell is up 1,800 and it's up 26 points. The S&P is at 3,600 and it's up 28 points. And the NASDAQ is at 11,000, it's up 40 points. So overall, on a percentage basis, you're getting a lot more upside from the Russell than you are from any of the other indices, as you could see here. Maybe not the Dow, I'm not sure. Let's take a quick look. Let's look at a percentage basis, a little cheat sheet for us. So SPY is up 82, Russell is up 1.42. You see what I'm talking about? DIA is up 110, and S&P should be up about 83. Let's look at the QQQ here. And the QQQ's up only 34. So as you could see here, the FANG stocks are not doing anyone any favors. And if you look at the NASDAQ in comparison to the Russell 2000, you'll see 0.3 something versus 1.43. So again, the Russell, the small caps keep outperforming. Now, let's talk about global data. We're higher by encouraging news, the development of COVID-19 vaccines, and more assurances of transition of power, which is very, very huge. Finally, something is happening. And folks, I'm not being political, but we need to have a driver at the wheel. You know, either Trump or Biden, but we need somebody in there. We can't have this guess who the president of the country is. We need certainty. U.S. federal government recognized Biden as the apparent winner, giving the green light for cooperation on transition of power, which is huge. Reports including the Associated Press that Biden has chosen, this is very important, federal chairman Janet Yellen as Treasury Secretary. And it added to investors' confidence because she actually knows what she's doing. Latest vaccine development are also helping raise hopes that normalcy will eventually be restored. Don't hold your breath, folks. It may take some time, because America is getting, it's kind of like what'll come first, the vaccine or this huge number of COVIDs again. Trading is expected to be light, as I mentioned, because it's a fragmented week ahead of the Thanksgiving holiday. And AstraZeneca is the latest drug to come out with good results. There's 3 now, which is very, very positive. The string of upbeat news about vaccine development has been butting up against increased caution as the virus continues to threaten the economy. Again, as I mentioned, it's a tale of two. Is it going to be the vaccine or is it going to be the COVID-19? Is it going to be the vaccine or is it going to be the COVID-19? And energy companies are notching amongst the biggest gains in the S&P because crude oil is now at $43.50 a barrel. That means U.S. frackers are no longer bleeding. Now, am I bullish on traditional energy? Not even close. I'm very bullish on non-traditional, evergreen energy. But remember, the sector that looks at energy, that focuses on energy, has both non-traditional and traditional energy stocks. So non-traditional is moving higher and traditional is moving higher, but traditional is still below the 200-day moving average. Let me show you what I'm talking about. Let me show you Exxon Mobil, for example. You'll see what I mean. So if you look at a traditional stock, notice the 200-day moving average. We're moving up, right? But we're moving up just like we moved here, and then we moved down, and then we moved up here, and then we moved down. But if you look at something like NAE, that's a evergreen, non-traditional company, you will see that it's completely the opposite of what Exxon looks like. So don't get too impressed by the fact that energies are making new highs. They're making highs because the non-traditional energy companies are making new highs. But traditional energy companies are at least no longer bleeding because frackers pay around $43, $44 a barrel to process the crude oil. So We've already looked at momentum levels. As far as news, Thursday, there's no trading day. Whenever you have a major day like Thanksgiving off on a Thursday or a Tuesday or a Monday, I call it a fragmented week, which means volume is low. We do have consumer confidence coming out today. That's going to reflect substantially on the GDP report, which is the biggest report of the quarter. That's coming out tomorrow. And we also have new home sales. We have personal income. Tomorrow is the big, big day for data. So we may get a little bit of volatility, a little bit more upside. But again, even if we have a lot of movement, don't expect liquidity to be there. And again, Friday is going to be just a non-adventurous day. And again, Thursday, there's no trading. Tomorrow, we can have some big days, but don't expect a lot of liquidity. Now, I wanted to show you something very, very important. This is the put-to-call ratio. We are right now at 0.65, which means the market is overbought. No question about it. Now, in terms of what's overbought, obviously technology, big tech is overbought. Now, if you look at the major sectors, over an average, industrial, material, and financial is now third spot. Consumer discretionary and technology on fourth and fifth spot. I remember somebody predicting that about 6 months ago. Now, if you look back a month ago, you'll see that financials were all the way down here. Technology and consumer discretionary were leading. But now, as I predicted, industrial basic materials are leading, and financial are the top spot. So I'm seeing a little bit more upside in the financials, which is positive. But don't hold your breath. Don't go with like banks like Wells Fargo. Let me show you Wells Fargo. You don't want to go that route. You want to go, and I'll show you which route you want to go to. See, same thing's happening with financials. It's happening with the energy sector. The good and the bad are going up, and it's causing markets to rally. You don't want to go there. You want to go into financials that are making higher highs, not higher lows. So again, put the call ratio is 0.65. Anytime we go below 0.70, it means the market's overbought. Now, to prove that to you, this is the S&P 500, the number of stocks in the S&P that are trading above the 200-day moving average. This is a 5-year chart. Look at where we're at right now. Have you seen us gone to this level in the last 5 years? No. Let's look at 10 years. 10 years we've gone here about, look at this. Every time we've gone to these levels, which was around 2010, we come down pretty hard, and we're near those levels. If you look at Max, again, we haven't been at these levels in ages, like in 7-8 years. And every time we move up to these levels, momentum levels subside, and we're right now at 88. That means 88% of stocks out of these 500 stocks, like 420 stocks, are above the 200-day moving average, and that's telling us the market's overbought on a broad basis. If you look at the NASDAQ 100, ay vey, 85%. 85%. Folks, this is nosebleed levels. Whenever we get to these levels, that's not a time to be a hero. So you've got to be very, very cautious and buy stocks that are not overbought. My suggestion is to stick with sectors that are rising, like financial, basic materials, or look at Russell 2000 stocks. So again, momentum levels are nosebleed levels. Put the call ratio. That means way, way, way more buyers are going into calls than puts. And when that happens, the market bounces. We haven't gone this low in a while. So I'm pointing this out to you. Put the call ratio is not our friend right now. Now, with that said, I've said a lot. Let's look at 3 stocks that I'm liking right now. 2 are in the financial sector, and 1 is in the basic material sector. So Morgan Stanley, investment banks. Investment banks are looking good. Notice above the 200-day moving average, making higher highs, 5-year highs. The stock is making all-time highs. I like Morgan Stanley, maybe on a pullback to the 55 level, possibly, but I like this stock. Another stock I like is Axis Financial. Again, look at where the stock is right now. It's looking pretty good, right? It's coming back. This is a 3-year chart. It's now at a 2-year high. And if you look at the profile of the stock, you will see that they do federally charted finances. Federally charted. It's a holding company of Federal Bank, which provides financials for single and multifamily residential properties. Residential properties, small to medium-sized businesses. That's huge, huge, huge right now. There's a lot of people buying homes that need residential home loans. But traditional banks, you really don't want to touch right now. You want federally chartered banks. All right? That's what you want right now. And notice something. Notice what sector this is in. Russell 2000. So Morgan Stanley making all-time highs. Axis Financial has a great story, residential properties, federally chartered Russell 2000. I'm telling you, and notice the price of this stock. It's been cooling off for a few days, made an all-time high. I like it right here at these levels, right around the 34 level with a stop right at the 32 level. Last but not least, we've got packaging. Packaging. Profile. Material. Basic material. What did I say about basic material? They're doing really well right now. So let's look at basic material. Packaging. Packaging. How do you think we're going to get all these vaccines? They need to be packaged, and more packaging. Those things you buy online, you've been buying clothes online, packaging, and more packaging. A lot of the stay-at-home economy is not going anywhere, especially over the next few months if COVID cases keep going. And if not, if the vaccine comes out, they're going to be delivered using packaging. Think about it. So I really like these stocks right here. Axis Financial, Morgan Stanley, and Packaging Company of America. Now, don't go anywhere. I've got something important for you. If 2020's volatility sent you back to financial square one, and you no longer trust the mainstream media to call the next stock market breakout, I get it. You're going to want to take a look at what one gold expert is calling the no-lose play of the decade. You're going to want to take a look at what one gold expert is calling no-lose play of the decade. That's right, no-lose play of the decade. I love that. It's a little-known gold stock that's trading for dirt cheap valuation. It's undervalued. And by getting into it right now, you could set yourself up for an enormous payday. I mean, enormous payday. All the details you need to know about this tiny Vancouver-based company is right here. All you've got to do is click on the link below and check it out. Again, don't let 2020's volatility scare you, send you back to square one. Get in on a no-lose play of a decade. That's what this expert is calling this, a no-lose play of the decade. Click the link below. Check it out now. You've got nothing to lose. And by the way, give me some feedback. I want to know if you're liking these videos. I want to know if you're getting something out of these videos. Let me know if you've got something you want me to cover. Let me know. If you don't like my shirt, let me know. If you hate me, let me know. If you love me, let me know. How else am I going to know if I'm doing you guys right? I'll talk to you guys later. And if I don't talk to you, have a wonderful Thanksgiving holiday. And don't overdose on the turkey. I'll be watching you.